Are you thinking about moving offshore to reduce your tax bill or change your lifestyle? Today, we're going to cover when it actually makes sense to make that move and when it doesn't. If you don't know me, I'm Elliot. I'm the founder of UK and UAE based tax and accounting firm Make Accounting Simple. And on this channel, let's talk about tax. We break down complex tax topics for entrepreneurs and online business owners. Please note that nothing in this video should be taken as specific personal, tax, legal, or financial advice. This video is for educational purposes only. In today's video, we're going to look at when it makes financial sense to move offshore, what factors you need to consider before making that jump, and how to avoid some of the most common and expensive mistakes. Now, there are typically two main reasons entrepreneurs move offshore. One, to save tax. Two, for lifestyle or quality of life. Let's talk about tax first. One of the biggest questions I get is, how much tax do I need to be paying for it to make sense to move? The answer is, it depends. It depends on where you're moving from and where you're moving to. If your cost of living is going to increase in the new country, then it's going to eat into any tax savings. If it's going down, great. You might benefit even more. But this is my minimum rule. Once you've factored in the cost of the business setup, the relocation costs, and any change to your lifestyle costs, the amount you're saving in tax should be at least double the cost. For example, if your total relocation cost is 15K, your tax savings in the first year should be at least 30K. Why? Because you'll spend time and energy setting everything up. You'll deal with admin and the distraction from running your business, and you'll want clear financial upside. That way, you get at least 100% return on the investment in the first year and even more in the years after. Now, not everyone moves purely for tax reasons. Maybe you run an online business and you just want to live by the beach. Maybe you're tired of city life and you want a different pace of life. In that case, tax becomes a bonus, but not the main driver. And that's fine. Just be really clear on what your priority is. Are you moving for lifestyle or are you moving for tax? Because that not only changes how you evaluate the move, but also what you might compromise on. As we'll explore later, there are three core pieces to the offshore puzzle, and in order to maximize the tax benefits, you may need to sacrifice on some of the lifestyle benefits, or vice versa. Now, if you are moving offshore, here are the three core elements you need to get right. 1, your personal tax residency. 2, where your company is incorporated. 3, where your company is managed and controlled from. Let me explain why this matters. In this example, I'm going to refer to Dubai as a low tax country and the UK as a high tax country. You can interchange Dubai with any other low or no tax country and the UK with any other high tax country. The answer is essentially the same. You can't just set up a company in a low tax country such as Dubai and keep living in a high tax country like the UK. If you do that, you are still a UK tax resident, and your company will likely be seen as UK based for tax purposes, meaning your Dubai company needs to pay UK corporation tax. So, the main way to take advantage of Dubai's 0 to 9% corporate and 0% personal tax is to no longer live in the UK, establish your company in the UAE, and manage the company from there. Now, there are some exceptions for this. For example, if the business is owned or managed by multiple directors or shareholders in different countries. For example, you might have 3 directors and shareholders. One might live in the UAE, one might live in the UK, and one might live in Spain. And in that case, it's possible that the company can benefit from Dubai's 0% to 9% corporate tax. The director who lives in the UAE will benefit from the 0% personal tax, but the directors in the UK and Spain will still be personal tax residents in the UK and Spain, and so will need to pay tax on their worldwide personal income in those countries. That means that if they're paid salary or dividends by that Dubai company, they need to pay personal taxes on that in the UK and Spain. They can't benefit from Dubai's 0% personal tax without moving there too. Remember, that would be the same if we swapped out Dubai with any other low or no tax country and the director was living in any other high tax country too. Setting up the offshore company is the easy bit. Structuring it in a way that's legal, tax efficient, and aligned with where you live, that's where most people get it wrong. So remember, the 3 core questions are: where will I live and be taxed personally? Where will my business be incorporated? Where will my business actually be run from? If all 3 of those don't match your plan, you'll have to rethink it. Moving offshore can save you thousands and sometimes millions in tax, but only if you do it right. If you're considering it, make sure you're clear on whether you're moving primarily for tax or primarily for lifestyle benefits, and that the tax savings make sense compared to the cost of the move, and that the structure is actually going to legally save you tax. If you found this helpful, please subscribe to the channel and drop a comment if there's a specific topic you want me to break down next. In the next video, we're going to go deeper into these 3 core components of an offshore setup, why they're so crucial, and give some examples of offshore setups done correctly and ones that leave tax exposure. If you're a UK or UAE business owner, my firm Make Accounting Simple can support you directly. Links are in the description. And if you want to work one-on-one with me to review or plan your setup, you'll find a consultation link below as well. Also, as a reminder, this video and channel breaks down tax topics to make them easier to understand, but it is not personal tax advice, and these videos are for educational purposes only. Everyone's situation is different, so please speak with a qualified professional specifically about your situation before making decisions about your taxes. Thanks for watching, and I'll see you in the next video where we'll be talking more about tax.